Welcome back to Wall Street Podcast. Today we're doing a deep dive into a pretty crucial market update. This one's from Citi Research. We're unpacking their latest report. NVIDIA Corp, NVDAO, mid-Q update, lifting TP to $190 on expanded AI TAM. It just came out, published July 7th, 2025. Our mission here is to really distill the essential insights for you on NVIDIA's outlook and, the whole evolving AI market. We want to cut through the noise, get right to the core stuff.
Okay, so let's get right into it. Citi just boosted its target price for NVIDIA to $190. That's a pretty significant number. What's the main driver here, especially regarding that AI Total Addressable Market, or TAM?
Right. Well, the really fascinating thing is just how much they've expanded that 2028 data center AI TAM forecast. Citi's now projecting it to hit $563 billion. That's up 13% from their previous $500 billion number, so a big jump.
13%, okay.
Yeah. And maybe the most interesting part of that increase isn't just the overall size, but where it's coming from. Specifically, they've really hiked the networking TAM projection. That's up to $119 billion now.
Wow, networking. Why such a big jump there? It seems to reflect this intensified demand for bigger AI training clusters. As these models get larger, the infrastructure to connect everything becomes much more critical. And you also have these emerging intra-networking opportunities as companies scale up their AI operations. On top of that, there's also about a 4% rise in the compute TAM, and that seems driven by higher than expected demand from sovereign AI initiative.
Sovereign AI, right. We're hearing more about that.
Exactly. And here's a detail that really caught my eye. Citi mentioned that for something called agentic AI, you might need around 10,000 GPUs, basically a supercomputer for every 10,000 enterprise employees.
10,000 GPUs per 10,000 employees. That sounds almost unbelievable. Can you break down agentic AI a bit? What does that actually mean for a company?
Sure. Think of agentic AI as AI systems that can act more autonomously. They can coordinate complex tasks, learn, adapt, often without constant human input once they're set up. Imagine intelligent agents managing whole workflows. That kind of capability needs immense parallel processing power to make decisions and coordinate actions across lots of data.
So that drives the hardware demand we were just talking about, both compute and that crucial networking piece.
Precisely. It suggests a potentially huge untapped demand in the enterprise space that could really transform things even beyond current models. It's a long-term catalyst.
Okay, so a massive TAM expansion potential.
Yeah.
But the report also sounds positive on NVIDIA's current operations, right? Their execution and product ramps.
Definitely. The report specifically says the Blackwell ramp going well. Blackwell is their latest generation AI platform, the GB200 and the upcoming GB300. It seems any early worries about supply bottlenecks for the GB200 are easing up. Deployments are happening quickly, suggesting NVIDIA is managing the transition efficiently.
And what about that sovereign AI angle you mentioned? How significant is that for NVIDIA right now?
It's becoming quite significant. The report highlights NVIDIA's deep involvement. They seem to have visibility into almost every major sovereign AI factory build-out. We're talking governments investing billions in their own national AI capabilities.
So these aren't just commercial customers.
Right. And NVIDIA is projecting tens of gigawatts of demand from these deals over the next couple of years. Gigawatts. That's just massive power draw, indicating huge hardware orders. It represents a very large scale and probably quite sticky revenue stream that's different from the usual enterprise market.
And they're feeling good about margins, too.
Yes, they note the company's confidence in hitting mid-70s% gross margins by the end of the year, which is, very healthy.
Okay, strong execution, expanding market. But there are always risks. What does Citi say about the broader AI accelerator market and potential headwinds for NVIDIA specifically?
Well, broadly, Citi sees strong growth overall. They project a 22% compound annual growth rate, CAGR, for all AI accelerators combined between 2025 and 2028. But here's a key point. They expect merchant GPUs, like NVIDIA's, to keep dominating the sales mix, staying above 85%.
Even with competition from ASICs?
Yes. Mainly because the average selling prices for these high-end GPUs are much higher, like 3x to 8x more than custom ASICs. Even if ASIC units grow faster from their smaller base, the dollar value remains heavily skewed towards GPUs because they're so versatile and powerful, even if more expensive.
Got it. So the flexibility pays off. What about specific risks?
The report mentions a few potential downsides. Competition in gaming is one. Also, the risk that adoption of new platforms in both data centers and gaming could be slower than hoped. And just general market lumpiness, ups and downs in demand in the automotive and data center sectors, those are always possibilities.
That makes sense. So overall, a pretty bullish report, but with the usual caveats.
Essentially, yes. It paints a picture of a rapidly expanding market where NVIDIA is currently very well positioned due to both technology and its engagement with these large-scale sovereign deals.
All right, that wraps up our deep dive into Citi's latest on NVIDIA. It really highlights just how fast things are moving in AI and how new data like this focused on networking needs and sovereign demand can shift the outlook. We've seen expanded market opportunities driven by these incredible potential innovations like agentic AI, and those huge government investments are really reshaping the whole landscape. Hopefully this gave you a clear, concise understanding of the key drivers Citi is seeing. Until next time, maybe think about this. With all this rapid infrastructure being built, what does that actually mean for the broader digital economy? How might it ripple out and impact industries maybe far beyond just tech? Something to consider.